Welcome to today's presentation on 8 unique scanning filters to get the results you want. In the world of trading, there are hundreds of opportunities every day, but the challenge is finding the ones that align with your strategy. Today, we'll explore how you can harness the power of advanced market scanners to uncover those golden trading opportunities that others might miss. The power of scanning filters. As traders, we face a fundamental challenge every day. There are hundreds of great trading opportunities, but we need to filter through the noise of the markets to find the best setups. This can feel like finding a needle in a haystack, but it becomes much easier once you understand how to start with proper scanning criteria. Every good scan begins with the right filters. There's no one-size-fits-all approach since all traders have different styles and strategies. However, once you understand which filters are available and how they work, you can begin creating scans that are perfectly tailored to your trading approach. Today, we'll explore 8 unique scanning filters that can help you consistently find great trade setups. Dollar volume. First, let's talk about dollar volume. While many traders are familiar with volume, which refers to the number of shares traded in a particular time period, dollar volume takes this a step further by accounting for a stock's price. To calculate a stock's dollar volume, you simply multiply the volume by the stock price. This filter is powerful because it helps equalize stocks across a broad price range. For example, if you scanned for stocks under $50 with 1 million in volume, you'd get a wide range of results. A stock trading 1 million shares at $1 would only have $1 million in dollar volume, which isn't very significant. But a stock trading 1 million shares at $50 would have $50 million in dollar volume, which is far more significant. By replacing your volume filter with a dollar volume filter, say $10 million, you can find better trading candidates that truly match your liquidity requirements. Number of trades. Next, let's discuss the number of trades filter. Liquidity is one of the most important components of day trading. Liquidity can be defined as the ease with which you can get in and out of positions in an equity. This is particularly important for momentum traders and scalpers who rely on precise entries and exits. The number of trades filter helps traders measure the true liquidity of a stock. This metric calculates the number of buy and sell orders for a given time period. This can be far more powerful than a simple volume indicator. For example, a stock may have traded 1 million shares, but if 400,000 of those came from just 4 block trades, the volume indicator can be misleading. The number of trades metric would help you gauge the true interest and activity in a stock, giving you a better sense of its actual liquidity. Moving averages. Moving averages are a fundamental tool in technical analysis. They're used to smooth a stock's price action by calculating the average closing prices over a given period. For example, the 50-period simple moving average would take the sum of the past 50 closing prices and divide it by 50. Moving averages are particularly useful when you want to account for the trend of a stock. While there's no simple way to scan for a stock that's in an uptrend, you can incorporate moving averages into your scans. For instance, if you're looking for a short-term uptrend, you might look for stocks trading above their 10-day moving average. For a longer-term uptrend, you might look for stocks trading above both their 50 and 200-day moving averages. Moving averages can be especially beneficial for swing traders who plan to hold positions for longer periods, as well as for traders interested in trading reversals. Average volume. Traders always want to follow the action, and in the market, action can be quantified by measuring volatility and liquidity. Simply put, traders want to find stocks making big moves that they can get in and out of with ease. Average volume is a great comparative metric when looking for breakout stocks. When a stock experiences higher levels of volatility, it's usually fueled by above-average volume. You can incorporate average volume filters into your scan to find stocks making significant moves. For example, you might look for stocks with daily volume that's at least 50% higher than their 60-day average trading volume. These filters will generally help you find stocks with higher volatility and liquidity, making for prime trading opportunities that align with momentum-based strategies. Day highs and lows. One of the challenging parts about creating a good scan is finding a way to quantify what you're looking for. Most traders would love to catch breakouts before they happen, but there's no easy button that uncovers these setups. However, if you get clever with your scans, you can gain a significant advantage in trading. Incorporating day highs and day lows into your scanning process can help you find stocks that are breaking out or breaking down. For example, if you want to find shorter-term breakouts, you might look for stocks that are trading above or below their 30-day highs by 1% or less. This approach helps you identify stocks that are at critical inflection points, potentially setting up for significant moves. Average daily range. The average daily range is a great metric for measuring volatility. Traders want to find stocks that have a broad price range, creating more trading opportunities. For example, if a stock is stuck in a 10-cent range every day, it would be difficult to place profitable trades without large sums of money. Conversely, a stock trading in a $5 daily range would provide plenty of opportunities. The daily range is calculated by taking the difference between the stock's daily high and daily low. If you're measuring this data over a period of time, you would add up these daily ranges and divide them by the number of days in the period. For instance, if over 3 days a stock had daily ranges of $5, $4, and $3, the 3-day average daily range would be $4. A $4 range on a stock price in the mid to high $20 range would provide plenty of great intraday trading opportunities. Float. A stock's float is defined as the number of shares available for trading. This is one of the few fundamental indicators that can have a significant impact on technical trading. Low float stocks are generally more volatile because they require less share volume to make big moves. It's not uncommon to see a low float stock run a few 100% in just a few days. The supply on these stocks is lower, so any buying pressure, demand, can push the stock much higher. While a stock's float isn't a great standalone indicator, it can be combined with other indicators to find prime trading setups. For example, you might look for stocks under $10 that are up 20% or more with a float of 10 million or less. This combination helps you find potentially explosive moves in stocks with limited supply. Short percent of float. We just discussed how the float is the number of shares available for trading. The short percent of float measures how many of those shares are held by short sellers. Stocks with a high percentage of short sellers can be prone to a short squeeze. This occurs when a bunch of short sellers all cover their positions in a close time period, often driving the price higher rapidly. Similar to the float metric, the short percentage of float should be used alongside other indicators. When using this indicator, you want to find stocks that are prone to an upcoming short squeeze. You might do this by looking for stocks that are breaking above their 10-day high with 20% or more of the float short. This combination of technical breakout and high short interest can signal a potential short squeeze setup. Using filters effectively. As we conclude, remember that there's an endless amount of different filters and filter combinations you can use when creating your scans. Think of these filters as tools in your toolkit. The goal isn't to use as many filters as possible. Just like tools in a toolkit, you want to understand how each of these filters works so you can use them at the appropriate time. Choose a goal for your scans and use your filters to help you find better trading opportunities. Whether you're looking for momentum plays, breakout setups, or short squeeze candidates, these 8 unique scanning filters can help you narrow down the universe of stocks to those that best fit your trading strategy. Thank you for your attention. I hope this presentation helps you enhance your trading by leveraging the power of advanced market scanners.